Hello, everyone. George DeSantis here with a look at the market for the week ending Friday, July 17th, 2020. I hope everyone is well and keeping safe. Um, Before we begin, do the usual. We bring up a disclaimer, ask you to take a look. Just realize that I'm not attempting to give any professional investment advice here. It is done purely for my own purposes, selfish reasons, first of all, so that I review the market and get my head together for what I might expect in the coming week. It's a video, anyone can take a look at it, use it in any way you wish to do so. And so now we will turn to some of the charts. We look at the general market on the we'll be using the S&P and perhaps the Nasdaq, and also at the end we'll take a look at some individual stocks using Shaken Analytics. Oh, shit. So here's a weekly chart of the S&P 500. Um, As usual, we'll take a look at the moving averages first. That's the 4 exponential moving average, the yellow line. The red line is the 9 exponential moving average, and the green line is the 30 weighted moving average. So on the weekly chart, according to these moving averages, we do have an uptrend. The parabolic is below the most recent bar, so there is no indication from the parabolic that we ought to consider this a switch in the trend to a downtrend. We're still in an uptrend. We are now just above 1 standard deviation, this dotted magenta line, and we have this target here, this target of 33.75 based on a triangle we calculated on the daily chart. You can see we also have the Fibonacci extension of 1618 coming in at 3400, and that pretty much lines up with the previous high here back in February. Back in February. So that would be the next target if we can break above that 32, 34, 35 area. Let's look at the daily chart. Now on the daily chart, you could see we have that triangle, and we calculated that target of forget what it is now, but I think it was 33 and change. In any case, when we look at the moving averages, again, we have moving averages above each other, the 4, the 9, the 30. So the trend is up according to these moving averages. And we have parabolic below the most recent bar. So that's bullish. No reason to reverse our thinking here to make it a downtrend. We're still in an uptrend. And the other thing we want to notice here is that the market went up and hit that 32, 35 region. That is this previous high here in February. This is the June high, and so we are bumping up against that June high resistance, and 3 times we did so last week. So on Monday and on Wednesday and on Friday we bumped up against that level. So the question becomes: is this resistance going to knock us back down so that we have a correction? Who knows how large that can be? Some sort of correction. We don't know that. But typically, if you have all these other indications lining up as bullish, then it is likely that we continue to break above that 32, 35 region and go higher. And since I sold a couple of stocks, hit my sell criterion of the 4 crossing over the 9 on the daily chart, I have some cash. I could do some buying again. Here's a quick look at the Nasdaq. On the weekly chart, we see nice uptrend. We still have the 4 above the 9 above 30, parabolic below the most recent bar. We recently came pretty close to the 2 standard deviation Bollinger Band, this green dotted line here. And so we pulled back a little bit last week on the Nasdaq. In fact, some tech stocks were a little weaker last week than they've been screaming anyway. They've been screaming up here, but they pulled back a little bit. Insofar as the other indicators are concerned, you could see MACD histogram, both of them, the 1939 and the 1226, they're both in bullish territory. And these other indicators are bullish as well. So let's turn to the daily chart. When we look at the daily chart, we see a little bit of a pullback here because we went close to the 3 standard deviation line here. We consolidated a little, continued to rally up on against that 2 standard deviation line, and we went above it, and of course that was too much to take, so we pulled back. Now we have the formation of a candle, not a candle, a triangle. And so we can see this ABCD triangle here, and we just broke above it. So that's encouraging, even though the parabolic is still above the most recent bar. Um, so most of the other indicators are bullish. Now, when we go down to MACD, you can see I put both of them here, the 1939, 1226. And as Jerry Appel, who created the MACD, suggests, we should use the 1939, this one here, for sell signals when it drops below the zero line. And it hasn't done so, although the 1226 did. Jerry suggests that we take buy signals off the 1226 and sell signals off the 1939. So he's the boss, and that's what I'll do. So I'd like to turn to the stock charts, a few of these charts that we've looked at before. And the first one I'm going to show you is Apple. You can see that Apple pulled back a little here, but it's still above that 50-day moving, I think it's that 9 exponential moving average. Okay, and the 9 and the 30, that blue line and the red line. So that's Apple. Here's a chart showing the spread between the new highs and new lows. And you can see that since we made that spike down and past that 4,000, minus 4,000 level, as we learned from Alex, we got a nice uptrend. We anticipated that, and that's what we got. Beautiful. Here's that chart of the S&P. It's a daily chart, and you can see we have a green bar. It shows what is called the impulse system developed by Alex Zeller. And when the bars are green, we are not allowed to go short. So this is bullish. In other words, when it's green, go long or hold. And that's on the S&P. And so here's another chart on stockcharts.com. It's the S&P 100 and the percentage of stocks above their 200-day moving average. You can see that since we made this low here in March, we are now back up here. So we have 55%. We like to see it above 50. So that's nice. That's also pretty bullish. So let's turn to the individual stocks and ETFs on Shaken Analytics. I can't tell you how much I really like this program. And, you know, I don't get any commission on it, you know, by trying to sell people the idea of using Shaken. But I could tell you it's made me a nice buck, okay? And it pays for the subscription in the very first trade you make, most of the time, you know, or first few trades. But Shaken does something unique. And what it does is it does fundamental and technical analysis. And it gives you that package of both those important areas of analysis. That's what is so unique about it. So take a look at the ETFs. The ETFs, these are the Spiders plus the Qs and this ETF ARKK, which I like very much. So we're looking at some of the top ones here, the ones that are bullish. You have the Qs, you have XLK, you have ARKK, which is heavily invested in Tesla. So it's a way to play Tesla if you don't want to buy a $1,500 stock. And you have the Spider here, XLC, XLV, the healthcare, and discretionary stocks. Those are the ones that are best performing. Those who get the email from me, I sent you an email saying that I like and I'm buying this RMD, ResMed. And so far so good. It was oversold when I bought it, and now it's ticked up because the price, of course, they gained a little. Okay, they gained $3 a share on Friday, $1.62. I mean 1.62%. So that's one that I like on that list. And here's a list of stocks that the most recent list from the alerts on the screener that we set up, giving us alerts with stocks that are very bullish. And if you look at the checklist here, most of these all of them will be green for the most part, except for the overbought, oversold area, because sometimes when the stock was oversold and it turns up because there's buying, it gets into what they call the neutral area, which is between the 30 and the 70 levels, 30%, 70%. So it's saying neutral here, but it was oversold. And the other thing that you can see on a stock like this is on ResMed is that it changed personality. That's one of the things that I like. And it went from neutral to bullish. So you can see that. Now, if you look at this stock on the list, you'll see something somewhat similar. Some of them will have money flow varying a bit, where you get a neutral rating here, but money flow is still positive, although they're rating it neutral here, but it's still green and above zero line. And if you went to some of these other stocks, you'll see somewhat similar things. See, all green. So you can take a picture, take your camera and take a picture of this, and I'll give you the other I'll page down and give you the rest of it. And in the meantime, let me take a look at a few others, like this one here, AMPH. You could see it became oversold, and now it's at an optimal level, meaning that the stop was oversold, and it now ticked up because there was buying. It had a money flow buy signal alert, relative strength buy alert, and so it's ticking up now, and that's why you get this buy signal here. So that's what we like about the Shaken, among other things. Take a look at this one. This one is overbought. All the rest of it is green on the checklist, but it's overbought, so you want to wait until it becomes oversold, or with a stock that is trending up nicely, I have discovered that if I can't get an oversold signal here, I might want to pick it up or buy it at the 21-day moving average right here. See? Buy it over at this level. Okay? Now let me page down and you could take a picture of the other ones. I think I could go right to the bottom and you can do that. Here's a list that I've shown you before. It's a list of stocks that I own, most of them, many of them, and including Tesla and Qualcomm and Nvidia, etc. And so you can see ARK is here, and Dell and Adobe. I don't own Dell right now, but it's looking pretty good again. Look at that, look at this gap up. It's now oversold and ticking up, you see. Let's see what the checklist says. Checklist is neutral, and money flow was weak, so that's why I think I sold it at that time. Let's take a look at some other stocks. And here's a list of those stocks that we considered to be stocks for the lockdown, you know. Kroger is here. We have Kroger. Look at that chart, right? Nice chart. And then there's Box and Citrix and a few others, quite a few others that are bullish. Some of them are overbought, so you have to wait till they become oversold, like this one, which is DBX, Dropbox. This one is now oversold and ticking up. That is T-Mobile. I think I mentioned it to you some time ago. Here's CrowdStrike. It's becoming oversold. It's coming down to the oversold region, and you can see it's near that 21-day average. So this would be an area where I would look to buy it if I were, interested in doing so. There's PayPal. PayPal came back to that 21-day average. It is now oversold, so here's a good time to get back into PayPal, and I think I might just do that. Well, folks, we come to the end of the 15-minute period. I hope you have a good weekend. It's Saturday, and we'll try to do this again next week. I'll send you emails when I think it's appropriate. Thanks for listening. Bye.